Alright, let's get right to it, to our market outlook for the week of June 10th to June 14th. Starting right away, we've been expecting rate cuts from the major banks for the longest time. There was a rate cut of 25 basis points by the Central Bank of Canada and the European Central Bank as well. We have rate announcements coming for the US dollar this week, so we'll see how that goes. We've been maintaining this bullish structure for the longest time on the monthly time frame. Last week, we had an impulsive push that took out this low. I like how well we respected and rejected that order block. The Federal Reserve not cutting rates after we've seen some rate cuts can be very, very bullish for the dollar. The bulls are still very much in control. If you watched my previous outlook, you'll understand view on the DXY so far. We also registered the divergence between the DXY and the EURUSD. That is another confluence that we should be making higher prices going into the week. So going forward, I see us reacting from this order block to take price higher and take out all these highs in succession. If you notice, we've had a swing high. If you don't know what a swing high is, you should watch my previous video. We started pushing down, closing below old lows, and now price wicked below this low and completely engulfed this candle and closed above the open and close of the consolidation of these last 2 weeks. This is another very strong bullish confidence that we have on the DXY. There is no questioning that we have a bullish sentiment going into next week. Just looking at the naked candles gives a very, very clear view of what is happening at any point in time. Take note of the highs, the lows, take note of which candles close below or above the previous candles, how they close. They close with the body, they close with the wick. Do they close above consolidations? Do they engulf other candles? What are the naked candles telling you? And then you can draw on your lines. Most important economic release for this week, I will focus on the CPI and the funds rate. The forecast is that they keep rates unchanged, which will be very, 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 very bullish for the dollar. And that will tie into the bias we have for this week. So my bias going into this week, I see the dollar taking out this high, so we should be revisiting 106.5 in the nearest future. Looking at what has transpired during this week since our outlook we had earlier, the most important news event, the CPI, which came in a little better than forecasted. However, it's still a far cry from what the Federal Reserve and FOMC expect as a maximum, which is 2%. As a result, the federal funds rate was kept unchanged at 5.5%, which is a very hawkish stance from the FOMC and the Federal Reserve. Okay, so that being said, we still have some high impact events this week. Alright, so looking at the DXY, we started out the week on this candle. This was Friday, and during our weekly outlook, we anticipated that this high would be taken out. So it was taken out on Monday. On Tuesday, we had a turnaround. We closed off this gap that we had during the NFP release. So we had this impulse on Wednesday during CPI, right into this order block, and an instant reaction during FOMC, which is quite bullish. This high, of course, I expect to be taken out by the end of the week, and potentially this high. Hello guys, welcome back. I hope you had a profitable week. Like we discussed during our midweek review and our market outlook, the DXY was bullish for the week, and we had exactly that play out. We had a retracement from Tuesday going into Wednesday, the CPI and FOMC release, and then following on Thursday and Friday, we took out this high and subsequently this high to print that bullish candle for the week. This week was very, very good with the moves. There were a lot of clean impulses to partake in. Now, if you contrast the bond yields and the movement we've had for the last 2 weeks, you realize something very interesting. Now, let me turn off this drawing so we can look at it clearly. Now, comparing this to the DXY, you realize that there's been a discrepancy, so to say. We have had higher prices going into... Okay, let's start off from here. We were bearish on the bond yields and the DXY all the way to this point. Then we turned bullish, however not as bullish as the bond yields, but then we continued bearish at the same time. We went bullish same time, but then here, when the DXY dumped during CPI and FOMC, we maintained this bullish structure by failing to take out this low. However, if you look at the bond yields here, you realize that it went lower and even lower following CPI and FOMC. This is the PPI release and the consumer sentiment on Friday. We kept going lower on the bond yields, but we went higher on the DXY. Now, during our market outlook for next week, we'll discuss more about this, and I'll let you know what I think is going on and how I'm going to approach the market going forward with this kind of discrepancy between the bond yields and the DXY. With that being said, I don't think there's much more to talk about. There's no need to make this video unnecessarily lengthy. I'll see you in the next video, which will be our market outlook tomorrow. Take care, enjoy your weekend, take some time off the charts, but at the same time, stay close to your charts if you know what I mean, and prepare for the next week. See you in the next video. Take care. Stay safe. If you watched to this point of the video, leave a thumbs up. Subscribe if you haven't, because why not? Share this video with anyone who you believe would find value in this video. And until next time, stay safe, trade safe. See you in the next video. Take care.